My name is Greg Kautz. I am currently the CEO and co-founder of a company called Black Owl Systems. We are a lease accounting solution. I'm based in Calgary, Alberta, Canada, and appreciate the opportunity to speak to your group. I'm a professional accountant by trade. I specialized when I did my accounting designation in cost accounting, which was I always planned on working in the manufacturing world. I found it fascinating. I never had the fortune to work directly for manufacturing, but I have a slide I want to talk about my background and how it applies to manufacturing. Prior to starting Black Owl, I was in ERP, I was in management consulting, doing finance transformations, ERP implementations, and health checks. And this is sort of what we're going to talk about today. And I've also, for 14 years for CPA Canada, I've been delivering courses on ERP, financial system selection, and health checks and doing mergers and acquisitions. So, jack of all trade accountant.
Greg, I'm assuming you will start now to share your slides.
Yes, yeah. So there we are. So we're going to talk about the finance function in manufacturing. And so one of the things I want to start out talking about is, value in finance. And it was starting to happen before even COVID, but there's been a lot of volatility in the global market. In businesses, a lot more financial stress, resource limitations, cost barriers. So everyone is looking for ways to optimize their finance processes. To me, accounting is the heartbeat of the company. It tells the health, the well-being of the company, and not having accountants spend hours creating journal entries and having more time doing analysis is a huge value add. But one of the things to survive is we've got to think differently. And, a lot of attention's always, well, we need a new ERP system. Let's throw out the accounting system we have. Let's get a new one. And then you get a cost and go, whoa, maybe there's another way. So hopefully I'm going to give you some ideas today to explore how to optimize your systems. So what I wanted to talk about is a lot of my career has been in the oil and gas industry, and I compare it so much to manufacturing. And this drawing was created in probably 1990. And this is before we really had a lot of computers to take advantage. But what I wanted to show you is this is just getting the costs to the wellhead. So, after the wellhead, you have your transportation, your product splits, the revenue accounting, and the cost after it leaves a well is another story. But this just shows you why I attribute manufacturing to the oil and gas industry. And if you look at this, and apologize for the text in it, this was hand developed before there was a lot of tools. So this was a draftsman would have created this initially. And so, you have your head office costs, which is your, could be salaries, accommodations, supply of material. And then those, as you see, follow the things, those get allocated and they flow through to the ultimate cost per barrel. Then you have, your district office costs where you start having benefits, vehicles, again, supplies, materials, well contractors who would be working on this. So again, so we had to capture coding at all of these different points and flow it through. And this is, before you had the advanced systems. Then you have your service facilities, which could be saltwater disposal wells, injector wells. You had plants and batteries. Again, all of those costs that were captured at that point flowed through. Then you have your direct costs, which again could be contract employees. And across all of this there's different municipal taxes at different layers. But what we had to do is each one of these elements, we had to break it down and analyze it, what the budget was for that, where it was. So this is where I start doing a lot of similarities to the manufacturing industry. We had a lot of variable components that we had to track and analyze. So my career in the oil and gas industry, I attribute a lot to manufacturing. Now, I have worked with manufacturing clients, helping put in systems. So, not an expert, but I'm familiar. So what do we look at in the finance function? You know, we've got transaction processing, we've got reporting and control, we've got decision, and the overall management. And this is a typical, this was information came in about the early 2000s. I pulled this off, the 65%, but it still holds true for a lot of organizations. You're spending a lot of your effort processing transactions, then you're getting out those monthly or quarterly reporting. So there's little time for starting to take deeper dive into that analysis. So what you want to do ultimately is you want to reduce the yellow and the green. So there's more time with more decision support and more time for management to manage the people and the processes. So this is the ultimate goal where your current state is, and how are you going to do this? And that's what we're going to talk about today. So why are you wanting to improve the efficiency of your accounting organization? You may have insufficient, unstable accounting systems. You may have a lot of side systems, which could be Excel. It could be antiquated software that was used for manufacturing before. You could have multiple data points of information hitting the accounting, and there's a lot of effort trying to reconcile it. See that a lot in the sales and sales side coming into the accounting system. In the oil and gas industry, there was a lot we called AFE, approval for expenditure. So it was your budgeting. And every engineer and geologist had a side system tracking what the AFE costs were. And they would always blame the accounting department for over-reporting their spend. They were below budget, and accounting was always saying they're higher. And there was a lot of reasons for those side systems and why there was so much inefficiency. I'm not going to go through this, but this just gives you an idea why are you looking for efficiencies in your accounting and finance organization? So it's a busy chart, but think of this as where you do your health check. Where are you looking? So you see on the left, it says people, and on the right is business partner. This is where you're wanting to get your accountants. They're not there just to slam in numbers, make sure that journal entries balance, and you get your output of your reports. You're wanting them to partner with the rest of the business to understand what are those drivers, what are those variances, what are the things driving the cost high or your profitability low. So again, it's nice to have, but again, you have to free up the time for the accountants to be able to get into that role. And sometimes maybe that accountant isn't that right partner. So again, it's hiring the right person, and it's having the right availability. And sometimes the systems, the processes, some of the controls are those barriers. Then again, we go on to processes. We want to optimize them. We want to standardize them. But it always used to be as people, process, systems. You're always focused. Those are the three elements of an efficient operation. Well, I'd like to throw in two more elements to that: is your data and your reporting, and your governance and controls. Those are as equally as important as those first three. Your data is today you're dealing with so much more information. You're dealing from, when I was back doing accounting, thousands of transactions. Now people are processing hundreds of thousands of transactions. There's fewer bodies, but more transactions being processed, and the systems have allowed us to do it. But what it's done is you don't have time to analyze that. So people have the idea, well, we'll just throw it all in a data warehouse, and somebody will figure it out. If we get all our systems and data in a warehouse, someone will take a Power BI report and they'll figure it out. Well, garbage in, garbage out. If you don't understand what the right data is and how it works, you still haven't achieved that. And then the other thing is always an afterthought. And, I see it a lot in my experience where you doing system implementations. I've done some pretty large ERP implementations. I've led those in the past. And it really had changed over the last 10 years, where before the auditors would come and sort of nod their head after. Now they're active. If you're a large public company, you could have SOX auditors, you could have internal control auditors, you could have the external auditors all wanting to be a part of that implementation process, looking over your shoulder. So again, all of these elements. So, this is an actual tool that I used to use with clients when I'd go in and do health checks, and we'd try to score them where they were. And sometimes I would do this, I was brought in for an engagement, we need a new ERP system, and we ended up, well, let's just take a step back. And there's sometimes we decided there's some things we can do with the old system, and we really didn't need a new ERP system. So we'll explore a few of those today. So, what are enablers for, the modern finance department? It's talent, processes. I'm saying ERP, your core financial system. And then what are your opportunities for digital transformation? And we're going to explore some of those as we go through today. So, what's unique to manufacturing? When I look at this landscape, where are your barriers? I'm sure you've got a lot more out there. If anyone wants to share any, pop it in the chat. I just should have the chat on the side so I can see it as well. Get it up here. Okay. So, you've got monitoring fluctuations in raw materials. It's a big thing that's hitting manufacturing across the world is a word called tariffs. How is that going to impact your profitability? It's huge. In Canada, we're hearing lots about the auto industry with tariffs back and forth, where we make parts for your manufacturing. Or for your auto industry, we manufacture autos. So sometimes they're looking, and it's back and forth multiple times for those tariffs. What's important, in your processes is scheduling your workflows, monitoring your production efficiencies, and it could be outside systems versus what's in your core accounting system. When you start looking at your accounting system or ERP, a big thing is, your variance analysis that you're doing is, are you able to break down the costs to do the proper variance analysis? If you've actually captured the expected cost and the actual cost, are you breaking it down? Can your accounting system handle that? Are you able to allocate overhead? Now, allocations, overhead, it's something we have very similar, the oil and gas industry, nobody's gotten it right. And there's been no system that actually, and a lot of it goes back to is how do you classify that data? So again, these are the things that are unique, what I feel for the manufacturing industry, and where you have challenges with your systems, people, processes, data, and controls. So we're just going to dive into some of these. So talking about talent, if I was looking 20 years ago when I was hiring an accountant, I'd look, okay, is he qualified? You want to make sure he actually passed his final exam. You're doing 3 interviews and they say, yep, he's a good person. You're lucky to have. And that used to be the extent, does he have the skills, the education? Was he maybe doing a similar job before? Now when people are starting to look, you're going well beyond that. You're wanting somebody not to be just the plain accountant. You're wanting that person potentially to be that business partner. So what you're looking for is you're looking for the communication skill, and you may do a few interviews. You just can't read the resume saying good communication skill, I'm good at this and this. Everyone does that. So you may want to delve into that. You're looking at the person. Yeah, and it isn't a leadership role within the accounting group. Maybe it's a leadership role with your stakeholders in the organization. Maybe your accountant starts leading groups and analyzing this. I go back at one point, I was with an oil company and we decentralized. So I moved to the field office, and with that went the engineering, the land, the geologist, the operations people, and actually the accountants took the prime role monthly, leading the review of the financials for that field office. And they were the ones where the engineers wanted to analyze their costs. There was variances. So we got our line accountants actually to take that leadership role in leading these groups of multiple discipline stakeholders. Critical thinking, one of the other things that's a high requirement for a lot of new accountants being hired is tech savvy. Strong in Excel skills. And there's, I'm I rate myself 2 to 3 out of Excel skills. My son, who's one of the co-founders of Black Owl, he's probably a 12 plus. And we don't like Excel because we want people to drop using Excel for lease accounting. But for us, it's a key tool in analyzing client information when we get it, slicing and dicing it, building macros to validate data. So we're seeing a lot more emphasis on tech savvy. The other thing I see a lot of is accountants becoming Power BI report writers. They don't want a tech guy doing it. They want a tech savvy accountant who understands the information and data and he knows what he's supposed to look at versus, the back and forth with the tech guy writing it and says, is this good enough? If you can get the accountant to do it. So we're seeing a lot more emphasis on the talent and the skills right up front hiring. And what some people are doing is they're redeploying resources. Maybe they're saying, hey, we need that skill. And so people are juggling the resources around in accounting, where some people are good at slamming the data in or analyzing those financial reports at quarter end to do disclosures, where somebody else may be that more collaborative leader being able to lead the groups outside. Okay, so talking about finance processes. So we talked about the people. Now we're talking about the process. My whole career has been process oriented. I go back to doing internal audit. My internal audits focused on business processes and where the control points were. Everything is a business process to me. And that's a lot of times where people are saying, well, my system's not working. Well, maybe it's the process behind it. Now, a lot of times it gets a lot more complicated where you're growing and you do an acquisition and you've merged systems, you've merged people and processes, and before starting Black Owl, I led a Canadian company, 2 engineering firms merging. And the battles we had about trying to decide how we're going to do job costing in the new ERP. We came from 2 different cultures, and the CEO finally had to step in and said, "This is the new way we're going to do it." So we had everyone was upset, but I sure liked where someone was decisive of he designed the new process. So when you're looking at it at your systems, there could be a bottleneck. It could be in your AP, AR. It could be in your financial reporting. There's always people having problems with asset accounting where people have side systems. They don't do the depreciation within the ERP tool. They don't like it, so they've done this. I had one client where they were doing it beautiful, and then they did a huge acquisition, and they just said no, and they actually pulled it out and started doing it by Excel. They just couldn't merge these multi-million-dollar companies trying to figure out, they got everything else except the fixed assets. So again, there's a lot of process issues within, and so part of that health check is what are your broken processes, and is there a way to optimize it that outside of changing the system? And I'm still not advocating you always keep your old system. I've put in many systems. I believe in having good technology. I'm a technology company now too, so there's always an opportunity. But before, what I'm trying to get across is go in knowing where your weaknesses is, because if you are looking for a new system, that's your focus for your new system is I need it strong in this key process. One of the things when I help clients select new ERP systems, my first question is, how many entities do you have? Do you have foreign currency? That's going to tell you which system I'm going to point you towards. Multi-entity, if you have multi-entity with multi-master data sources, you want a good system to manage that. So, other things in processes where there's barriers, as you know, I've talked about overheads, allocations, profitability analysis. Uh, there's a lot of inefficiencies. You know, I did one ERP or SAP implementation, and working with the financial reporting group on trying to get rid of these spreadsheets, and we're going to a consolidation tool. And during that discovery, I went and talked to the tax people, and they were actually duplicated the same spreadsheet that financial reporting was doing. So there's two groups creating two separate consolidations manually before we went on. And the tax group was thinking they were just going to continue on. So again, we had to get tax and financial reporting to work out a process so they could share the information, where before it was two separate groups going. And it wasn't until we did the ERP implementation that we found out that those processes, and we actually saved the tax department a huge amount of time by relying on that, and then they could get it out an automated way out of the system. So I'm not going to go through all of these. You know, another is the month-end close process. Um, One of the tips, what I always did when I started a new ERP implementation, I went to financial reporting and said, how many adjusting journal entries do you have each month? And people would say, well, that's crazy. Why are you asking? And I said, well, that tells me how many manual processes you have out of your accounting system, is how many adjusting journal entries you have to prepare each month. It gives you a quick insight into where it is. Jason, you got your hand up, I just noticed. So.
Yeah, I just have a quick question on you talked about the complexity, or I think you mentioned it. I mean, do you think that because we have all these systems and everything that like sometimes the accounting side, gets away from us? It gets so because they know that systems can handle the complexity of rules. I mean, think about the whole thing with, the lease accounting. How many times has it changed and stuff? But do you find that because, is it expected to be so complicated in some of the work you do because there is systems and they can handle so much data versus sometimes a little more simplified approach to some pieces of accounting? It makes a lot more sense. I mean, it's just one of the things I've always thought about. I've wrestled with because before you've had a lot of systems, I grew up in school without, computers, and then later on word pro typewriters and redoing it and simplified how many drafts, for example, of something I had to do for school. By the time I got into, college, you're doing multiple drafts over and over again
Yeah.
because it was paper and printing and reprinting was cheaper. Not quite then, but I just think about that as like an example of the same thing with accounting. Like whether it's the rules, the way you do it, everything they expect it to be more complicated because it be handled with the systems. And is it really worth it? Sometimes you say, what was the end result of all that complexity?
Yeah, well, I totally agree with you. And, a scenario, something I've thought of over the years is, back in the 90s when I was, analyzing oil and gas production. We'd wait, on month end, you'd run to the printer overnight and you'd grab your reports and you would pound those into Excel, and you'd start, and well, no, actually into Lotus, not into Excel. Yeah. And you'd pound that in and start doing your analysis. And you know what? I will tell you, back then we had a better understanding of what our cost per barrel was, what our operating costs were, to what I saw a lot of clients, 5 years ago, or maybe even today, because people have relied on the systems. They kick out a report. Everything's about the quarter end reports for your public companies, quarter over quarter analysis. To me, knowing where you were um, March 31st, 2024 versus 2025 for the quarter isn't as meaningful as understanding maybe your business is an 18-month trend, and that's your business cycle. And it makes more sense to analyze those business cycles versus the regulators telling you to do quarter over quarter. But what I found is there's so much regulations piled onto accountants now for reporting. Lease accounting is a good example. It's taken away people understanding, having time to actually get back to understand where your uh, business is and where the numbers are. So,
Yeah, that somebody once said, beware of false precision. Like you try to get too precise, especially like on lease accounting or whatever. It's just too exact. Like, what are you really purchasing? What is the value of what you have? How do we value it? And just move on, like instead of keep reiterating. So anyway, I appreciate that. Thank you.
Yeah. Okay. So, what's the ultimate goal? This diagram shows you've got manually executed processes. You maybe have multiple Excel and it's manually being viewed. What you're looking for is process. Canada, we say process. America, you say process. Automation, accelerated, repeatable calculations, and you want automation in your workflows. So, that's your ultimate goal. And there's a lot of work. There's a lot of people doing RPA tools to automate your processes. And, and there is a lot of opportunity for that, but it's, understanding what your system can and cannot do. There's been a lot of I'll talk about the systems here in a bit. So, how do you accelerate those processes? So, I gave you an example where all of the processes could be slowed or so, on your AP, AR, there's a lot of tools you can add on for your capturing vendors' invoices and workflows for approvals. There's tools like you can even go further up with your vendor selection, your qualifications, Ariba, Treasury. There's a tool called Kariba. A lot of people use as a bolt-on. There's for your financial reporting, there's, business Power BI, there's consolidation software. A lot of times I've seen companies, they have multiple accounting systems or ERPs, and they're looking at making a big jump and then end up getting a new consolidation software. And that was the process when they were looking for, was that. It was a simple mapping multiple accounting systems. So there's some great tools in that space. Asset accounting, again, that's the biggest black box there is. I don't know if people have heard of Maximo. That's for asset management, and that's for more tracking what components, when they need to be repaired, the life of them. But for a good standalone fixed asset module to add on to your accounting system, there's very few, except we will be coming out with one shortly. That's on our roadmap, Black Owl. So we've got some ideas on that. Overheads and allocations. There isn't any tools I've seen in my career that can streamline that other than I've seen some well-built spreadsheets over the years. But if that's something that's important to you, that's got to be a key component if you're looking for a new ERP system. Monthly close cycle. I'm going to plug lease accounting software, a good one. We're getting a lot of people leaving existing products coming to us because of the efficiencies. Blackline is a reconciliation tool that manages for larger organizations, and they've had a lot of success managing the month-end close process. And again, planning consolidation. The big one now for consolidation tool that's sort of leading the market is called OneStream. And, a lot of people are raving about OneStream. So I'm going to talk a bit about, the market ERP accounting systems. So little has changed in the core functionality over the last 10 years, maybe 15 years in my career seeing, they're pretty stagnant. And I was just talking, had coffee this week with a VP from SAP. And he was just saying SAP is going more out of the box. They're going with their SAP public. They want customers to be more no change, less configuration. So they're pushing more out to best of breed solutions outside. They want people just to go core ERP, everyone configured very similar. It's a huge thing SAP is starting to push by pushing their SAP public, which is the cloud-based multi-tenant solution versus what they call now SAP private, which is your large enterprise solutions. So what the trend will be is, your accounting systems or ERPs are getting less change, less robust. And there hasn't been really big new functionality that's come out in the last 10, 15 years. There's not much more way, just like your Samsung or your iPhone, the new models come out. There's no new functionality on there. They've thought of everything from cameras to recording, They say there's AI in there now. I don't know what upgrading my phone for AI is going to get me. But a lot more plug and play, and we'll talk about that. What ERPs now are getting much better is sharing activities where people are configuring more, onboarding new staff, it's setting up a request for office, it's sending to accounting saying this person's going to need these rules in the accounting or accesses in the accounting system, separation of duty. There's a lot more on the workflow of sharing activities I've seen in the last few years. Um, you know, One of the things we're seeing is fewer point solutions for ERP. And I know manufacturing there's a lot of best of breeds that have been around for years. And we're seeing a lot of those drop off where people are saying, I'm just going to go to Oracle NetSuite or Oracle Cloud or Microsoft Finance. So we're seeing a lot of the smaller players in the ERP space drop off and the others taking bigger market share. So, three questions to ask when you're optimizing your financial systems. Does my system need to be upgraded or replaced? Can my existing accounting system be reconfigured to better align with the business needs? And I'm going to talk a bit about reconfiguring. I was always doing a lot of the new implementations until I started bumping into some clients. I saved a client tens of millions of dollars. I talked them out of an ERP. I found it was that consolidation tool we went to that actually they didn't need. But then I've had clients where they should have gone on to an ERP and they kept their 5 standalone, and it was paying for seeing the accountants. And the CFO wouldn't sign off on it. He says, "Well, I'll just hire a few more accountants to do spreadsheets. It's a lot cheaper than dropping $1 million on a new an accounting system." But that organization ended up having 5 different procurement processes. So, the people in procurement weren't happy because they had 5 different systems they were having to work with. So, this is, and as I said, I'll be sharing my deck later. These are the things to consider when you're changing your existing accounting system. Absence of standard processes. That's the huge benefit of an ERP system. It standardizes processes. You know, um, if you have multiple interfaces with multiple side systems, and if there's a way to eliminate those and move sort of that core functionality, maybe your purchasing, maybe your inventory management can be combined into a new ERP system. So there's, those things, you've got unreliable data bridges, multiple master data file sources because you're having to maintain those side systems with multiple master data. These are some of the things as you go through and you're building your business case. Do I need to replace a new one, or is there things that we can do? So I came across this a couple of years ago, and it was a really good example. Your tier 1 is your SAPs, your Workday, JD Edwards, Oracle Cloud, Microsoft Finance and Operations, and I'm not sure what they name it today. It seems like every 2 years they're renaming that module. Your tier 2 is you have your NetSuites, your Business Centrals, SAP Business One, SAP by Design. Those are sort of your tier 2 systems. And a lot of times people, I just came across this with somebody when I was doing business development for Black Owl. They were going to be moving off Business Central and they were going to go into NetSuite. And I said, hold on, why are you jumping from a tier 2? Well, it's just not working right. Well, are you happy with your integrator, the person supporting it? Well, these guys really never listened to us. So, so we think we're going to switch systems. Well, I said, well, why don't you first get a health check from a different integrator? So they ended up getting another Business Central support, and they came in and they made some suggestions how to improve it. So I've seen that so often where people are ready to jump and it was a bad configuration. I've seen ERP systems where modules weren't turned on. They're sitting there, but they didn't know it was available. Because people changed over the years and whoever put it in didn't turn something off and they kept the sides process. And so this is just an idea. Now, what you see below, your number of active customers, your end users, that's a rule of thumb. And a lot of people, if you talk to an Oracle salesperson, you're on NetSuite, they say, oh, you've got you have 501 clients, you should switch over to Oracle Cloud. If your system's still working, I've never used those things throughout my career in looking. I look at functionality. If you've got multi-entities and multi-currency, I'm steering you to the tier ones, because if you have multi-entities, Business Central is not going to work for you, because each company is set up as a separate database in their structure. So you actually have to sign in and sign out. So if you have 10 companies in Business Central, you're signing in and signing out of each of those. And that means too, you're maintaining 10 sets of master data and your intercompanies are a mess. So, those are some of the things that you look when you're moving. What's the best system? Or maybe you have to leave and you have to get a new one because there's so many inefficiencies with multi-currency, multi-entity. Oh, Jason, you had a hand up again, or is that you're on mute?
Yeah, sorry about that. So yeah, I just had a question. You mentioned one other thing you mentioned about purpose-built systems. So, somebody has some sort of other module or tool to do something specific. Given, ERP systems and, again, the better just general technology with certain integrations. And I know before I talked about it too complex, but I'm talking about like if you do have a tool that does something really well, does it always make sense to try to replicate that in an ERP system versus just having the two systems with APIs talk to each other, let that do it's like an expert at whatever it's doing?
Yes.
Is that
No.
better sometimes than trying to drag that complexity into ERP? Because while you want to use the ERP system for everything, sometimes it just you're building another mousetrap. Like if one already works, just use the APIs. So my point there being is the technology is better now that you can just have them talk to each other and not have to reinvent the wheel.
The trend now is to have that best of breed, that side system. If it works well, a good example is OneStream. SAP does great. It can do consolidation. All of these tools in the tier one have good consolidation tools. OneStream is superior. Just like for lease accounting, some of the tier ones, some of the tier two have what I say light lease accounting. When you start getting into reassessments, modifications, that's where we stand out. We separate ourselves. We have lessee, lessor. We've got very robust APIs going in to any accounting system. We can map to any. So, we're exactly what you're saying, Jason. There's cases where you get less functionality in the ERPs, and it's better to stick with, your best of breed solutions on top of it. You're sort of leading me up to another slide. Yeah.
Sorry, Greg, just to add to that, I mean, I have heard now a couple of times when it comes to RPA and AI and, the agents which you're already able or to kind of pull out of, some of the current SaaS products. It seems to be more the trend to use those to kind of fix things even. So not having a full, complete SAP ERP as example, and have certain transactions done just by, some AI agent.
Yeah. Yeah. So, no, great points, Chris. So, and I'm not going to, just high level. So, you can look at this is a real life example I worked on. I did an ERP implementation. We went live. First quarter end, the accountants came to me and said, why do we have negative depreciation? What are you talking about? Negative depreciation. The system was adding back to the balance sheet. Asset was fully depreciated, went back to the implementer and they said, well, that's the way it works. If you're still using the asset, You add back, it starts creating negative depreciation. They had configured this for every client they had. We went, whoa, that is not how accounting works. And from that, we actually brought in a firm to do an assessment of this brand new implemented SAP. We had 70 points we had to change. Intercompany wasn't set up. FX wasn't set up correctly. There was a lot of new functionality that was available in SAP wasn't configured. So from that point, I thought, okay, there's got to be something. And we've seen this a lot, in Calgary, there's the big four that come around, do SAP implementations, and there's a market to go in right after and figure out what wasn't implemented right. So sometimes before you throw out the bathwater, make sure there could be some opportunity to clean that. And the same thing, with a small system, ERP system, you have less options to change the configuration. But a lot of times there could be, the biggest issue I found with people is a chart of accounts. They want to change their system because they don't like hierarchy. You can re-implement, you can change the hierarchy. I don't know how many chart of accounts, new hierarchies I've designed through my career. I've stopped counting. And, it's, some people have gone on new system and they use the old hierarchy from the legacy solution. Well, they never took advantage of the functionality that was available in the system they're on. So that's the biggest win I've seen, is just looking at your chart of accounts. Leading into that, there's so many elements in designing your chart of accounts. And, when you get the slides, if you have any questions about any of this after, please don't hesitate to reach out. And I'm just sort of looking at the time, so I'm sort of speeding up my thing. But if anyone has any questions about this, please don't hesitate. I don't mind. I love discussing this stuff. So, but I've used this over so many years, is when, I've helped clients go onto a new ERP system and they start look at the selection process. I get them to start redesigning their chart of accounts even before they selected the new one. What are you trying to manage? There's so many different elements of information that you're trying to do. You're doing revenue, expense, assets, equity, KPIs. Who are the groups wanting it? Well, legal entities, accounting, projects. If you've got WBS cost objects, if you're doing that, well, a lot of accounting systems can't do WBS, which breaks down your payables even further. So again, there's so much work you can do, and even on existing systems, I've been on projects where we re-implement the hierarchy in the chart of accounts, and we've improved that performance measures those companies were looking for. So digital transformation is, people think the magic solution is digital transformation. You hear a lot of it. Now we see AI. AI is going to fix everything. RPA. All of these things you keep hearing. And this is a survey from the consulting group I was with before, and everyone was thinking it's a game changer, digital transformation, but so many people didn't know what it is, and still they don't know. It's buzzwords unless you have something quantifiable. So, for years, everyone, you would have your ERP, your accounting system, but they would use Workday or SuccessFactors for their HR management. Salesforce would be the driving tool still for your CRM. Even though the ERP had it, people still went to those core systems to manage those key processes because they said, yeah, the ERP can do it, but I know these can do it better. That's where, your next level, your OneStreams, your Blackline, your Power BI, Black Owl, Tipalti is an invoice processing. ADP, how many people do net payroll in their accounting system or ERP, or do you go to Ceridian or ADP to do it? Yeah, I've never, throughout my career, I don't want to do payroll in an accounting system. And, if you tried doing it in SAP, good luck finding a functional consultant who actually knows it. That's probably one of the toughest resources to find. So Chris asked me to talk about lease accounting for manufacturing. So, manufacturing, you've got both lessee, you're leasing your assets, it could be buildings, equipment, it could be operating or finance leases. So, there's complexity in how you're doing that. And then if you're leasing out to your customers, whether it's sales, direct financing, operating, so on the lessor side. So again, there's a lot of complications where your ERP systems cannot do it, and you have to look for a solution. Now, if you have lessor, we're probably the only one that has lessor lease accounting. Just another plug there. So again, thinking of what your systems can and can't do, looking at process inefficiencies. What I say is too much effort. You compare a normal AP transaction that goes through, there's more effort spent on a lease accounting transaction. I don't know what the true number is, but way too much effort is spent doing lease accounting. And that's why when my son Derek had the vision of, he worked with one of them and said, I could build a better one, and he has. So just showing you where are the challenges in lease accounting, where are those process blocks, it's classifying the lease, it's doing the right calculations, journal entries with big broken workbooks, reassessments, modifications, prior period adjustments. That's where other systems, other spreadsheets blow up, and all of a sudden you're in a month end and your accountant's trying to figure this out. That's not taking a press of a button. It's taking hours to do. So, there's just, you say word lease accounting. I just wanted to give a visualization. Where are the challenges? And, this is where you can streamline it, your problem, your solution. So as I'm trying to leave a few minutes, and I can stay later. I'm not, and I've got nothing. It's only 4:52 here. So when you're looking at your organization, where are you in your talent? Where are you in your processes? Where are you with your ERP system? And as I said, anyone who wants to talk accounting systems, reach out. I'd love to do a virtual coffee and happy to share. As I said, I've been doing seminars for 15 years with CPA Canada, and I still have people reaching out with questions. I used to be in the consulting business to sell them the help. Now it's me giving back to the world. And so this was the health check. So when you're doing your health check, is you're going through these elements. Do I have the right skills? Do I need my talent to be more critical thinking? Are they in the right roles? Are the processes too complex? And then you start finding, what are your complex processes? I'm sure inventory is a huge thing in manufacturing, guarantee. Doing your cost accounting is another. Your closing process, everyone's got issues with closing. When your executive come and say, you're a 5-day close and we want to shave a day off, or, a 2-week close and we're going to shave a couple days, it's always happening. Do you need a new system? Are you needing a reconfiguration? Could it just be your chart of accounts and your hierarchy? And maybe you can't change it in your core system, but maybe in your consolidation tool, you could change it and get that more relevant information. Or is there other tools that can help you? Like SaaS-based tools like OneStream or Black Owl, or is there an opportunity to use your Power BI as your data warehouse? Like, I've seen I've seen people with huge success, and I've seen companies burn millions of dollars trying to get data warehouses and never getting any results out. I've seen both extremes on that. So, yeah. I put in earlier in the chat my contact information. Please reach out if you have any questions, where you are in your journey in optimizing your financial systems processes. Yeah, reach out. Love to talk to you.